December is shaping up to be the moment when the entire market finally wakes up. And everything we're seeing right now is pointing toward a major shift that most people still don't understand. For months, liquidity has been suffocating risk assets. The pressure has been building quietly, and instead of destroying momentum, it has been coiling it tighter and tighter. Now that coil is reaching the point where it snaps. And when it does, the reaction across crypto, stocks, and global risk assets will be fast, sharp, and impossible to ignore. This isn't speculation, it's macro timing, and the clock is running out. Welcome back to We Are Cosmic, where we break down the markets like real analysts. Not noise, not hype, just clear insights that help you think like the top 1%. I hope you're having an amazing day wherever you're watching from. Make sure you hit like, subscribe, and turn on notifications because the next few weeks may be some of the most important moments in this entire market cycle. And if you want to learn how the wealthiest investors position themselves early, long before the crowd reacts, you can unlock the XRP Millionaire Blueprint or upgrade to Blueprint Pro for full access to frameworks, the 100x stock formula, insider updates, and the exact strategies institutions follow. Link is in the pinned comment below. Now, let's get into why December is becoming the turning point everyone needs to pay attention to. Cathie Wood isn't simply giving opinions, she is giving timelines, clear, direct, institutional-grade timelines. She said liquidity begins returning in early December. She said quantitative tightening, QT, could end within days. And she said the Federal Reserve may finally make the first shift toward easing, marking the beginning of a brand new chapter for global markets. If she's right, the weakness we are seeing today isn't actually weakness. It's the final calm before the next surge. Look at the evidence. Bitcoin is already recovering and pushing back above $90,000. The entire crypto market is holding strong above the $3 trillion mark. Global stocks bounced sharply from extreme fear levels, with the fear index hitting a shocking 7 on November 20th, only for markets to snap back almost instantly. The S&P reclaiming the 6,870 level would put it right back on track for new all-time highs. These are not normal movements. This is the kind of sentiment shift that happens before big macro changes. So why isn't Bitcoin blasting past $110,000 yet? Why is XRP still around 2.18 instead of breaking out? Why are altcoins not exploding already? One word, liquidity. Liquidity is the lifeblood of every risk asset on Earth. Crypto reacts to liquidity faster than any other market. And for months, the Federal Reserve has been draining liquidity aggressively through QT. When liquidity dries up, Bitcoin slows down, altcoins stall, and assets like XRP, no matter how strong their fundamentals are, behave like they're trapped under a heavy blanket. That blanket is about to be lifted. Bitcoin dominance is falling on the weekly chart. This is one of the earliest signs of rotation forming. But the real altcoin expansion cannot begin until liquidity officially returns. And the date that institutional voices keep mentioning is December. December 1st for QT ending, December 10th for a potential rate cut. Ending QT is not the same as QE, but it is still a massive shift. It stops the drain. And for crypto, just stopping the drain is enough to trigger sharp upward momentum. We are standing right before that potential shift. And if the pivot truly begins in December, this market will not start slow. It will start explosive. As we move deeper into this unfolding setup, it becomes increasingly clear that liquidity, not sentiment, not fundamentals, not narratives, is the single missing ingredient holding the entire market back. Everything else is already in position. Bitcoin dominance is already rolling over. Stocks have already recovered from extreme fear. Crypto's overall structure is already primed for expansion. The only barrier left is the liquidity wall, and once that wall falls, the market won't climb. It will rush. Let's break this down clearly. Bitcoin has been showing quiet but powerful strength despite liquidity being sucked out of the system. Its weekly support level around $86,600 has consistently held, even during moments of stress. This tells us something extremely important. Buyers are still willing to step in at higher and higher floors. Momentum hasn't died. It's simply waiting for confirmation. And that confirmation comes with one clean weekly close above 33,600 SAO. If that happens, the next wave towards six-figure territory becomes unlocked. That has been the historical pattern over and over. Bitcoin leads early, consolidates, and then breaks higher once macro conditions align. And this is where the opportunity for altcoins begins. Across every major crypto cycle in history, Bitcoin makes the first move. It absorbs the earliest inflows because it is the safest and deepest asset in the crypto risk curve. But once Bitcoin stabilizes, once dominance begins to roll over, Once liquidity starts flowing back into the system, that is when altcoins ignite. That is when the real parabolic moves begin. And that is when assets like XRP outperform the broader market because they respond faster to new capital. Right now, XRP isn't lagging due to weak fundamentals. It's lagging because crypto is still operating inside a macro liquidity trap. On lower time frames, XRP continues making lower highs and lower lows, a classic bearish structure. But this structure isn't a sign of weakness, it's a sign of compression. And compression is exactly what happens before major upside reversals. The moment XRP breaks above the Farigas anomalous 2.2 57 level, the structure begins to flip. The moment it clears how MQ 69 Charles, the ignition fully lights. From there, the chart doesn't need slow grinding. It can move vertically because all the pressure that has been built during months of sideways action finally gets released. And we already saw a preview of that strength. XRP climbed over 17% in the past week, while many large caps barely moved. That was not an accident. That was accumulation. That was early positioning. That was ETF anticipation starting to show up under the surface. Smart money doesn't wait for confirmation. Smart money positions during sideways markets, during fear, during the quiet phase, because that's where the asymmetry is. Zoom out and the picture becomes even clearer. Stocks are recovering. Bitcoin is holding major support. Bitcoin dominance is falling. QT is ending. Rate cuts are approaching. Institutional voices are pointing directly to December. All of these forces are converging at the same moment, and crypto is already coiling tightly within its long-term structure. When liquidity returns, everything accelerates. ETFs can accumulate faster, market makers can push harder, and altcoins get released from the macro pressure that has been sitting on them. This is why Cathie Wood said liquidity returns next month. Not someday, not eventually, but next month. She sees what many people are missing. The combination of QT ending, rate cuts approaching, and global financial stress forcing the Fed to shift. These macro mechanics are aligning with crypto's technical structure perfectly, and whenever liquidity flips from tight to loose, crypto reacts violently to the upside. The setup is forming, the coil is compressing, the market is preparing for rotation, and XRP is sitting right in the center of where the next wave of liquidity could flow. As we enter this next phase of the analysis, it's important to understand that the market isn't waiting for excitement, it's waiting for confirmation. All the major indicators, from institutional commentary to liquidity signals, are pointing to the same narrow window, December. And for the first time in over a year, the pieces are lining up in a way that historically leads to explosive risk asset expansions. Let's break this down in simple terms. The end of quantitative tightening, QT, is not just another headline. QT has been the biggest source of pressure on risk assets for the last year. When the Fed drains liquidity, every asset that depends on capital flow gets suffocated, especially crypto. Altcoins suffer first, hardest, and longest. XRP is one of the clearest examples of this. Despite strong fundamentals and increasing institutional interest, it has traded like a liquidity-starved asset. But QT is ending soon, and that alone changes everything. When QT stops, the Federal Reserve stops being a major seller of treasuries. That means the Fed stops pulling money out of the financial system. And even though ending QT is not the same as active QE money printing, it is the first big green light that markets have been desperate to see. Stopping the drain is enough to send capital flowing back toward risk assets fast. Now, layer this with the possibility of the first rate cut in mid-December or early January. Rate cuts are one of the strongest catalysts for markets. They shift sentiment, they unlock capital, they incentivize risk-taking. When institutions see both QT ending and rate cuts beginning, they don't sit back and wait, they move. This is exactly why analysts like Cathie Wood are going public saying liquidity returns next month. Not a vague prediction, a timeline. And she's not alone. Repo markets are flashing signs of strain. Banks are bending under tightening. Global liquidity charts are hitting levels that historically force the Fed to act. Something has to give, and December is where the pivot begins. Now let's bring this back to crypto. Bitcoin has already shown its hand. It pushed above $90,000, reclaimed support levels, and is hovering near the zone that typically precedes a breakout into six-figure territory. Bitcoin dominance is starting to fall. which has always been the earliest sign of capital preparing to rotate into altcoins. This is classic pre-rotation behavior, but altcoins will not fully break out until liquidity officially returns. And that brings us to XRP, the asset sitting in one of the tightest coils we've seen in this cycle. XRP's current structure is a textbook compression pattern. The range is narrowing, the highs are getting slightly lower, but the lows have stopped breaking. Seller pressure is weakening and demand has started quietly increasing. These are not signs of a bearish continuation. These are signs of an asset preparing for resolution. Coils do not resolve sideways forever. Eventually, they break hard. What decides the direction of the break? Liquidity. And liquidity is now days or weeks away from flipping positive. Look at the key levels. $2.57. The first spark. $2.69. The ignition zone. Above these levels, the entire structure flips from bearish to bullish in a single candle. That is how suppressed assets behave when the macro environment finally shifts. The market doesn't ease into the move, it erupts. We already saw the early signal. XRP climbed 17% in a week where most large caps barely moved. That was not a coincidence. That was early positioning by those who understand the macro setup. These are the same players who accumulated Bitcoin under $20,000 when everyone else was fearful. They do not wait for a breakout. They anticipate it. This is the quiet phase, the disbelief phase, the accumulation phase. While the public waits for confirmation, institutions quietly build positions. They prefer sideways markets because price stays stable while liquidity dries up from impatient traders. And this is exactly what's happening with XRP right now. Pressure is building. The coil is tightening. And liquidity is the match waiting to fall into place. When the switch flips, altcoins begin the rotation cycle. And XRP, sitting at the intersection of macro alignment, technical setup, and institutional interest, becomes one of the first beneficiaries. The pieces are set, the clock is ticking. And December may be the moment everything accelerates at once. Today, every major global organization, whether it's IMF, BIS, World Bank, or central banks, keeps repeating one thing. The current financial rails are too slow, too expensive, and too outdated. Banks cannot move money instantly across borders, settlement still takes days, and the cost of transferring large amounts is extremely high. When you combine this with increasing global trade, the system becomes even more stressed. We are heading into a future where financial institutions cannot continue with old rails. This is why digital assets built for settlement are becoming the main focus. And in this category, only a few assets exist, and even fewer are battle-tested. XRP has been tested in real banking environments for years, and it still remains one of the strongest options for fast, low-cost settlement. Another major factor coming into play is liquidity. Large banks and governments need assets that can handle billions of dollars of movement instantly. Volatility is not even the main issue. Liquidity is. Bitcoin cannot handle this level of throughput. Ethereum cannot provide instant settlement. Many new coins do not have stability, infrastructure, or regulation. But XRP's design is extremely different. It was created to move value at lightning speed, with fractions of a penny in cost, and its network can handle huge volumes without slowing down. This is why Ripple has been building partnerships with banks for almost a decade. When the world needs a solution, they already have one tested and ready. One of the most important developments is the rise of Tapu CBDCs, central bank digital currencies. Almost every major country is building or testing them. But here's the truth most people don't understand. These CBDCs will not operate alone. They need a bridge. They need a neutral digital asset that can settle between them, especially across borders. And that is where XRP enters again. Ripple has openly worked with over 20 governments on CBDC pilots, and this is not a coincidence. They understand that the global economy is entering a new phase where value must move instantly, just like information does on the internet. The asset chosen as the bridge will naturally become extremely valuable, not because people hype it, but because institutions rely on it. Another thing you must understand is the hot regulatory shift, For years, crypto markets were confused, but now governments are building clear frameworks. And every time a regulation comes out, settlement tokens are given special attention. Compliance, clarity, and utility are becoming the main factors for long-term survival. XRP has already gone through one of the biggest legal battles in crypto history, and it came out stronger. That's why many analysts believe that once global regulations fully align, capital will move toward assets that are safe, compliant, fast, and institution ready. Again, XRP fits perfectly into that box. So, when you see price moving slowly today, don't think nothing is happening. The real moves are happening behind closed doors. Banks are upgrading their systems. Governments are preparing new frameworks. Global debt is forcing a redesign of the financial infrastructure. And the entire world is shifting from old rails to digital settlement. And when that shift hits the mainstream, XRP's utility will not be a theory. It will be the engine behind trillions of dollars of movement. The moment that many XRP holders are waiting for, the global liquidity reset. This is not a theory, not hype, and not speculation. This is something financial leaders, economists, bankers, and global institutions have been openly preparing for. The world economy is sitting on record levels of debt, record levels of inflation, and a settlement system that was never designed to handle the speed and volume of today's digital economy. Something has to change. And whenever systems reach this level of pressure, the solution always comes from innovation, not from repeating the past. That is why in the world of digital assets, only a few tokens will play a major role. And XRP is one of the strongest candidates for becoming the backbone of new liquidity flows. Many people misunderstand what liquidity reset means. It does not mean that currencies disappear overnight. It does not mean that countries stop using their national money. Instead, it means the rails underneath the global financial system get upgraded. The same way the internet replaced fax machines, blockchain settlement will replace old SWIFT-style settlement. And during this upgrade, the world will need neutral, instant, and scalable digital assets to serve as the connecting layer between different currencies. This is where XRP's purpose becomes extremely powerful. It was created exactly for this kind of global environment. When liquidity becomes tight, banks cannot afford delays or high settlement risks. Imagine you are a bank trying to move millions of dollars across borders, and you need to wait 2 or 3 days for settlement. That delay slows the entire economy. That delay increases risk. That delay costs billions every year. And when the global economy is already stressed, these delays become unacceptable. This is why institutions are searching for alternatives that can move large amounts instantly, reliably, and cheaply. XRP solves this problem with near instant settlement and extremely low transaction costs. This is not about hype. It's about real, measurable efficiency. Another huge factor is the shift toward tokenization. Over the next few years, assets like real estate, stocks, commodities, treasury bonds, and even entire payment systems will be tokenized. This will unlock trillions of dollars of value. But here is the key. Tokenized assets still need fast settlement. You can digitize everything, but if you can't move value freely, the system breaks. XRP's design allows it to become a settlement layer for tokenized assets, especially in cross-border environments. This is why more analysts are now connecting the rapid growth of tokenization with XRP's long-term utility. We also can't ignore the role of institutional adoption. For years, banks stayed away from crypto because of regulatory uncertainty. But as regulations become clearer, they are slowly moving in. And institutions don't look at coins based on hype. They look at infrastructure, compliance, and reliability. XRP fits institutional requirements far more than 99% of other crypto assets. It has real-world use cases, long-term partnerships, and technology built specifically for financial systems. This is why many insiders believe that once banks fully enter the digital asset market, XRP will be one of the first tokens they adopt at scale. Now let's talk about something that every investor must understand: timing. In crypto, the biggest profits come before the major announcements, not after. When prices are quiet, when the market looks slow, that is when smart money accumulates. Most people buy when the price is exploding, but professionals buy when everything looks calm on the surface but is heating up behind the scenes. And right now, all indicators point to a coming shift. Regulations, tokenization, institutional frameworks, CBDC development, and global liquidity issues. They are all building toward the same direction: a financial system that must become faster, smarter, and more connected. This is why the long-term vision for XRP remains strong. It is not just a cryptocurrency, it is a tool designed for global settlement. And as the world approaches a liquidity reset, assets like XRP will move from being speculative to being essential. As we reach the final part of this breakdown, I want to bring everything together so you fully understand how big this moment is, not just for XRP, but for the entire future of global finance. Because what we are witnessing right now is not a small market trend. It is a complete transformation of how value moves across the world. And whenever you see a transformation of this scale, the assets that are built with purpose, built with utility, and built with long-term vision always rise to the top. XRP is one of those assets, and the reason is simple. It solves real problems that the world can no longer ignore. Most people living today grew up in a financial system where sending money took days, international transfers were expensive, and banks relied on outdated technology that was created decades ago. But the reality is that system is collapsing under its own weight. Global debt is rising, transaction demand is rising, and the old rails simply cannot keep up. This is why governments, central banks, and institutions are racing to build digital financial systems. And in this new system, the assets that provide fast, reliable, and scalable settlement will become the backbone of global liquidity. XRP is positioned exactly in that zone. Now let's talk about something that every long-term investor must understand. Utility always wins. Hype comes and goes, trends change every few months, and thousands of tokens disappear. But utility never dies. If something solves a real-world problem, it will always be valuable. XRP solves the most important problem in finance, the problem of slow, expensive, and unreliable cross-border settlement. Whether the market is bullish or bearish, whether the narrative changes or not, the world will always need instant settlement. And that need becomes stronger every year. Another important point you must understand is that we are early. Even though XRP has been around for years, the global adoption cycle for digital settlement is still in its first stages. Think of it like the early days of the internet. Most people don't see the full picture yet, but the foundations are being built. Banks are testing new systems, governments are drafting regulations, institutions are preparing frameworks. All these steps are happening quietly, slowly, and mostly behind closed doors. When the world finally switches to digital settlement, it will look like it happened overnight. But the truth is, the preparation is happening right now. This is why your patience as an investor is not just important, it's powerful. The market often tests people emotionally before rewarding them financially. XRP investors know this more than anyone. They have seen delays, FUD, lawsuits, confusion, and volatility. But they have also seen progress, partnerships, adoption, and resilience. The fact that XRP is still standing strong after such a long journey shows one thing clearly. It is not a short-term project. It is a long-term infrastructure asset. As we move forward, there will be moments of excitement, moments of fear, and moments of uncertainty. That is normal. Every major financial revolution in history has gone through the same phases, but the key question you should always ask is, does the asset I'm holding have real value, real use, real demand, real purpose? And if the answer is yes, then temporary market noise does not matter. XRP's purpose is clear: to move global value instantly. That purpose will only grow stronger as the world transitions into the digital age. So as we close this script, I want to leave you with this final message. The future of finance is changing, and assets like XRP are not here to follow the trend. They are here to lead it. Whether you are a new investor or someone who has been holding for years, remember that we are still early in the adoption curve. The big moves happen when the world finally connects the dots, and that moment is coming much faster than most people realize. Thank you for joining this deep dive. Stay informed, stay patient, and stay ready, because the next chapter of XRP's journey is going to be one of the biggest we have ever seen.